Hi guys, welcome to the Savvy Money Show with me, your host Sean. If you find any of today's entertainment helpful, don't forget to smash that lovely like button. If you haven't subscribed already, don't forget to hit the subscribe button and the bell notification to notify you when a new video gets out. Now, as you know, I have 3 separate trading apps that are completely free to use in the description down below. But we're going to go on with the show and describe why Warren Buffett thinks that another crash is coming. Warren Buffett, as we know, runs Berkshire Hathaway. This is Berkshire B because I can't afford the A shares, but the only difference is the voting rights. Now, first thing we look at is the S&P 500, 90-year index. We can see it going up and up and up. You can see a few crashes along the way. Right, it's a 90-year historical chart, and we go to Warren Buffett's, what they call the Warren Buffett index, and you can see when the index goes up too fast, too quickly, it's due a correction. And right now, according to him, it's due a correction. And he uses what's known as the Brock value. Now, this is to 2019. The white line is the S&P 500. If it goes under the green line, stocks are undervalued. If it goes the white line is a Brock value. The yellow line is the S&P 500. Sorry about that. If the yellow line goes under the green line, it's undervalued. If it goes above the red line, it's overpriced. And to show you Brock versus the S&P, this is it. If it, you can see there how it's been tying the Brock value, towing along with the Brock value. Now, the way he views things is the higher the interest rates, the lower the value of stocks. The lower the interest rates, then the higher the value of stocks. Means the stocks are overvalued because more people can borrow to buy stocks, more companies can borrow to buy stock. And also on top of that, as you are aware, that a lot of people in the US are being given stimulus checks, and around 70 to 90% of them apparently dipping their toe in the stock market with the stimulus checks. Well, whether they're dipping their toe in or whether they know and are seasoned people in the stock market, they're using it to buy stocks at the moment, which is fine. It's a good way to use your stimulus money if you can afford it. The issue I have is it pushes the price of the stocks up at a time they shouldn't be up. You have, for the US, 15% unemployment, which is 5% above when the recession was, and 10% below when the Great Depression was. Now, when that's the official rise, but when you factor in the unofficial ones, like the ones on furlough, PPP, you'll probably get double that, like another 10% to 15%. With England, when you consider everyone on furlough and everyone unemployed, you get when you consider everyone furloughed and unemployed, then it's 60%. But the governments don't consider those people because they think those people are going to go back to work. But according to reports, I think only a small percentage of those people are going to actually return to work. Majority of them won't. And in the UK, they've just come out with a bill saying from August, companies have to start paying the furlough, even though they said furlough will last till October at least. Now, we thought the housing market would crash. A lot of people did, because once Airbnb started to collapse, we thought it would be like a domino effect, but it hasn't, because people had the foresight to see, if I'm going to work from home, if I don't have to be in the city, then I'll move to a better place outside of the city, especially if my company is moving their premises outside of the city. So in the long run, I'm better off. I'll get a bigger place, a smaller mortgage, and it's better for me. And when my company reopens, I don't have to go to the city anyway. So, and that's helped save it. There are still some people who want to live in the city and need to live in the city. Now, the thing is, you have the housing market under stress, you have huge unemployment, you have companies under stress, you have the currency is under stress and money under stress. That you're getting everything under stress. You just need a domino and a catalyst, and everything's going to collapse. And Warren Buffett sees this, so he's holding all this cash in preparation. So we have to decide, do we keep on looking for value stocks or growth stocks, or do we start holding cash? See, he's the type of person, he has enough investments that even if he sits on this cash for 5-10 years, it doesn't matter, because he'll still be getting income from the investments. So, whereas with us, we don't have that many diverse stocks. Anyway, let me know your comments in the comment box below, and I'll see you in the next video.